If this bull market were to last like the last one, there's going to be 20 corrections. It's going to happen when something gets frothy. Maybe you take a little profit. When something sells off, including gold itself or a stock that hasn't had bad news, maybe that's an invitation to add a few more shares if you want. Even if you do nothing, just knowing that gives you power over the cycle.
Welcome back. Today I am joined with Jeff Clark, author of The Gold Advisor, as well as the book Pay Dirt, Mining Profits for Gold and Silver Stocks. Jeffrey, thanks for joining me.
Hey, it's great to be here, Jeremy. Thanks for having me.
Yeah, it's a pleasure. It's interesting. The more conversations I have with people in the space, specifically some of the gold bugs, I find out we all sort of have a similar origin story, and it's that our fathers dragged us into this space.
Yeah.
My dad through the conference business, and you've told some stories about your father prospecting and getting caught with the gold bug and moving out to California. So can you tell me a little bit about, I guess, your awakening to, gold as an investment and as an industry, and kind of what broke you into this world?
Yeah, thank you. My dad was a gold prospector. He got bit by the gold bug from the very first time he was panning at a river and saw that shiny little nugget in the bottom of his pan. He was hooked. So it kind of was a second career for him, and he devoted, oh geez, at least 20 years to doing it. He worked on his own. He didn't work for a company, but had a group of friends and had some success. His biggest find was actually this giant 5 pound piece of bright white quartz, and there was bright gold running through it. And we estimated it was about 3.5 ounces. It was a beautiful piece. I mean, it was stunning actually to look at. Everyone thought so when they saw it. And then eventually he broke it down into some jewelry and things like that. That's what he liked to do with a lot of the gold that he personally found. So he had some very unique pieces, over his life, and us kids all inherited them. But yeah, he had a pretty good time at it. He loved it, and I think some of that rubbed off on me. So uh, that's how I got my start anyway.
There's definitely a gravitation towards a shiny metal that I think all humans for the last 10,000 years have been attracted to. So when you see it in the rock like that, it's very special as well, because in its natural environment, when it's not placer, is
It
quite
is. And
unique.
even when it's small, it's actually got some heft to it. You can tell it's not just another rock. It's actually real metal, real gold, and it's got some heft to it, which kind of hints at the whole idea of it being money, right? So, um, yeah, it's fun to find and fun to hold when you have it.
Absolutely. And so that early interest kind of sparked you to kind of look for some of the names in the space, and it drew you to a very interesting group, Casey Research, Doug Casey, and you started your career as an analyst with Casey Research. So how did you find Doug? How did you get introduced? How did that relationship kind of unfold?
Yeah, there's a interesting story there. So I was actually a subscriber to Casey Research way back in the day, and I was learning a tremendous amount. I mean, they were kind of it back then, right? They were the place to go for that kind of information and stock picks. But anyway, so I completed my first subscription year with them, and I realized I had learned so much about the industry above and beyond what I had learned with my dad. So I wrote a thank you letter to them when it was time to renew for year two. And I said, hey, thank you for this, learning a lot, blah, blah, blah. And oh, by the way, P.S., are you hiring? I thought, oh, that'd be a kick, that'd be fun. And it was Lobo Tigre that wrote back. And he said, oh, thank you. You're welcome. Glad you're learning a lot. And oh, well, we're always looking for writing samples. We're looking for, good writers. So if you want to send some samples in, go ahead and do that. So I thought, wow, really? So I jumped right on that. And I sent him too much. I sent him like three writing samples, one of which was like 10 pages, a little bit of overkill on my part. But I wanted him to see pardon me, that I could write and I knew what I was talking about and that. he wrote back and said, "Okay, Mr. Clark, this is good, but if you're really serious about this, what we want you to do is to pick a mining stock and write about it, given their was it 6Ps or 8Ps, whatever they had back in the day. It's since changed, but and run that stock through our system and let's see how you do." So he gave me, and this will test how long you've been around, Jeremy, but he gave me Aurelian Resources. They were the company in Ecuador that actually found the Fruta del Norte deposit. And
Okay.
that was like a 10,000 bagger. No kidding. It skyrocketed on that discovery. Had a lot of problems after that, getting into production, and it never did get back to where it was. But anyway, so he wanted me to write on that, and I'm like, holy crap, it had already run up a lot. So it was like that was a pretty tough call. So
Mm.
I dug in and for the next 2 weeks, really did a lot of research, even made some calls to South America and really took it seriously and wrote up my report and sent it to him and promptly heard nothing. And I thought, oh man, I'm disappointed. So I wrote to him again like a week or two later and said, hey, just in case you missed this, and it turns out he was on site at a company at a project in Africa and wasn't able to check email at the time. So he reviewed it and said, "Okay, this is good." And so then he put me in touch with the CEO, and they hired me on a part-time trial basis to make sure I wasn't, faking it or making it up or whatever. But as they say, the rest is history, and I eventually became the editor of what was the largest circulating gold newsletter at the time, was called Big Gold. So I learned a lot there. Lobo was my mentor, and I will say that to this day. He was my mentor. And probably you know what, not to ramble on here, Jeremy, but probably the biggest lesson I learned from him was a very important one, and that is to be skeptical. A CEO or a mining executive, whatever, will tell you XYZ, and maybe only X is the case or XY. It's not the everything, and they're always optimistic, right? And
Yeah.
putting their best foot forward. That's their job.
Yeah.
But as analysts and as potential investors, we need to be more skeptical about that and dig down behind the headlines and behind the news and really analyze, is this a stock that is really worth owning or not? And I learned so much from everybody there at Casey Research and from my dad and from others that I eventually wrote a book about it. So,
That's right.
but those were the good old days, back at Casey Research. It's a different company now, but those were some very good times and definitely learned a lot.
And some good times for the markets as well. There was definitely a few nice runs sprinkled in during that
Yep.
tenure. And
Yep.
so we're going to actually speak about your book a little bit. And right in the forward, actually, Mike Maloney, who writes the forward for the book, quotes Robert Kiyosaki saying, investing is a team sport. And it sounds like that was a big part of your learning at that moment and that era was understanding it's a team sport, gaining the mentorship, gaining the soundboards. And for the book, you did a lot of interviews for people. So I guess in addition to everything you learned from that early part of the career, what were some of the more like I think you interviewed like dozens and dozens of different analysts and pundits and CEOs. So kind of out of that breadth as well, what new awakenings came out of that
So yeah, that's a good
system?
question because I had, by this point I kind of had my method down and what I did to, locate a potential winning mining stock,
Mm.
had some success, and so I wasn't with a newsletter at in 2019, so I just started disclosing my picks and on Twitter or conferences or interviews, and but there was no follow up. And the first question I got was, well, how do you pick what you just named, So I was getting a lot of questions like that, and the idea of writing a book came into being. But, at the time I was just too busy. I was honestly too busy because if you're going to write a book, you want to do it right, right?
Hmm.
So I put it off, and then COVID hit and I kind of lost my excuse. You couldn't go anywhere or do anything. So I turned on the nightlight at the desk and started to write. And meanwhile, a good friend Dan over at Mike Maloney's firm, goldsilver.com, came up with the perfect title, Pay Dirt. I'm like,
Mhm.
oh, that is the perfect title. So anyway, I wrote a draft and it was okay, but the feedback I got was, well, you know what? It's kind of boring, Jeff. It's kind of a big data dump. And I realized, oh my gosh, they're right. It wasn't really that entertaining. It was just like, here's everything I know. So
Mhm.
they hired me an editor, and we started from scratch again and basically told it in a much more entertaining, relatable fashion. So anyone who doesn't know anything about the industry can pick this book up and run with it. And
Mhm.
the other suggestion my editor had was, Jeff, you know what? Nobody interviews other people for their book. Why don't you interview some people in the industry that have been successful and put them in the book? I did that. It was a great idea, little time consuming, but I interviewed 17 people and put their excerpts in the book as well on all different topics, from all the way to owning gold, all the way to exploration, when to sell, everything. So there's over 100 snippets from all these gentlemen in the book as well, on top of, the method that I teach in the book. So I have to say it's pretty valuable, all this information. I mean, even a veteran who's been around for a long time is going to see some things in there they haven't seen before. So anyway, the book came out. It's much more entertaining to read now. There's even a free sample on the website. People can read about the scariest mine I've ever been in and see if the book is for them or not. So, but I think adding all those other people in the industry that have also been successful really added another dimension to the book. And I will tell you, those people are very, is opinionated the right word? They're very clear, very specific on what they think you should look for. There's no ambiguity. Not, you might try this, or this might be a good idea. No, 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 no. Look for this. If you see this, eliminate it. If you see that, go to the next step. I mean, very clear, very specific. And I think that's very helpful for the potential investor.
Yeah, absolutely. And I think we speak so much about the importance of mentorships, and the beautiful thing about in today's day and age is that you can just acquire this sort of crowd of mentors through all these different means, through their newsletters, through these books, and it really is. I mean, in your personal life, having that team is so valuable, but then even a step further in business and investing is so valuable. And I can attest to the the gripping nature of the book, because yes, reading, I won't give too much away, but reading about you slide down a hole in a silver mine in China was quite
Yeah, yeah,
entertaining. So I will tell people to uh, uh to go read it
yeah.
for that purpose.
Well, I started to slide, but then I got stuck, and that's what makes it the scariest mine. It was a little scary at first.
Yes, for as advanced as technology is, sometimes it's still pretty
It's
old
still just
school.
exactly right.
Yeah, and so to kind of dive in a little bit more, there's a few other things. I don't want to go too detailed into it because I do want people to pick up the book, but you speak about a formula for picking winning stocks, and just kind of at a high level, without giving the granularity to it. What would that formula sort of entail?
Well, there are six things that I think everybody needs to screen for when looking at a mining stock. We go into lots of detail in order to screen for those. Go to this site, look at this, look at that. Very, very clear, very specific. Um, but I think anyone would agree that it all starts with the three legs of the stool. The people, the property, and the politics.
Mm,
And it always starts with the people. We have some very specific techniques you can try to look at people. You want to look beyond their resume. Anybody can write a good resume. And then the politics, it must be a pro-mining jurisdiction because you can't move the mine, so you need to have a pro-mining jurisdiction where property rights are respected. And then and only then do I look at the project, believe it or not. So if I hear about a drill result from some company somewhere and someone says, "Hey, did you see that big drill hit?" Well, the first thing I want to know is, okay, who's behind it and where is it? And then if those two things check out, then I'll go seriously consider what the drill hit might be. Um, so it really is those three things, and you need to at least start with those three things. And if you do that, hey, you're 90% ahead of the game, I think.
Mhm.
But that's where you probably want to start. And again, we go into lots of detail in the book.
Right, right. And this is a little bit of a tangent. So in order, people, jurisdiction, and then project. Uh,
Yes.
are there any, I guess, maybe undercover jurisdictions? Like obviously people are really hot on Canada and the US pretty consistently. Are there any other jurisdictions out there you think right now that might be sort of under the radar in terms of their attractiveness?
That's a great question, because politics do change, right? Regimes
Hmm.
change, regulations can change, mining industry, regulators can change. So, I think it's good to keep your pulse on that. So in the book, I say these are pro-mining jurisdictions, these are no-fly zones, but
Hmm.
then you have some in the middle that, well, they might be depending on this or that, right? So some of those, for me, it might be Brazil. Believe it or not, might be Colombia. I was just there. I can tell you more about that later. But um, so you always want to keep your pulse on that. The Fraser mining survey every year, and the one just came out here a month or so ago, the updated one. That's a good place to start, because it's the answers are from executives working in those countries, and so they're anonymous, so you're getting some pretty honest feedback about whether or not they would invest there. And sometimes the answers are good, and sometimes the answers are not so good. Sometimes they're surprising, so that's a good place to start. I wouldn't rely 100% on it because things, even when I was writing the book, the mining survey had XYZ country rated here. And in the middle of the book, all of a sudden it went off the rails. The country went off the rails
Right.
politically. And we had to change the rating, before the final book was published. So things change a lot. So you have to kind of keep your pulse on it. But there are things you can do to kind of monitor that. But those are some countries I might, take a look at.
Right, right. And yeah, like you said, policy changes can really change the attractiveness of a country, but staying away from places that might forego the rule of law uh, and not respect claim rights. So you also have in the book the five commandments for the mining investor. Uh, which is I don't want you to give away all five, but which would be your favorite out of the five?
Well, I don't like your question because everyone should go, adhere to all
They're all
five, right?
commandments. They're all commandments.
But when you get to the end of the book, it's like there's some great, information in there, I think. And
Hmm.
it really helps you identify something. And then you come to the point where, okay, what's my strategy for buying this stock, adding in tranches, selling the stock? I mean, there's a strategy involved in buying, right? So you can identify a dozen winners, potential winners,
Hmm.
and yet you could still lose money. Like, well, how does that happen? Well, it can be because you don't adhere to the five commandments for the mining stock investor. But if I had to pick one, it'd probably just be the first one, and that is you have to buy a basket. You have to take the Pringles approach, right? You can't eat just one, you can't buy just one. So, especially if you're investing down in the juniors and explorers and things like that, you can't put all your money in one stock. It's just that simple. You have to have a basket. Uh, Consider the fact that GDXJ has dozens and dozens of stocks in it. Same with GDX. We have to do the same. Now, you don't need 50. In fact, I think 50 is too many
Hmm.
because once you get so many, even if you have a big winner, you're starting to dilute your return. So I
Yeah.
think 10, 12 is, in the junior sector for explorers is kind of a good sweet spot. Maybe not all at once. They'll come and go and you'll add to some and that sort of thing. But I think that's a good number to kind of shoot for.
Right. Yeah. Manageable number that you can maintain research on every month and stay updated with. And you stated that you're actually probably more heavily weighted towards juniors in your own portfolio compared to maybe some of your counterparts. Can you share what your maybe split is between physicals, gold and silver, juniors? developers or producers?
Yeah, so I think it all starts with gold, and I talk about this in the book, why you have to own gold. You must own some physical gold. I mean, look at how vulnerable the financial system is these days, and look at gold. It's $2,300 an ounce. As you and I talk, I mean, a little tiny ounce is that much. So there's a reason for that. And I think, you know, market participants pick up on that. And I think it's going to go higher because a lot of the risks that are in the system haven't even played out yet. So you have to start with physical. And actually, there was a long-term study done about, okay, what's the right risk reward balance on how much of your portfolio should be in gold? And that study showed that if you have more than 25%, you're gonna you have lower risk, but you're missing out on some potential reward by not owning other assets. If you have below 20%, then you're taking too much risk by owning more of these other assets, stocks and things, and
Mm,
not enough gold. And so the sweet spot for owning physical gold, going all the way back to the 1960s, research shows that that magic percentage is somewhere between 20 and 25%.
wow.
May sound like a lot to a lot of people, but hey, I'm very comfortable with that percentage, especially in the current environment. Hey, if someday we get a more honest financial system, a more sound money system, we don't have to own as much gold, right?
Hmm.
But for now, I think we do. And then, going on down the ladder, like you said, Jeremy, I don't own a lot of producers, even mid tiers or small producers. I own a few, and then developers. The reason I own some of those is because they're so cheap right now. Money has
Mm,
not trickled down to them, and yet they have a real asset. They're not exploring to find gold; they've already found it, and they're in that process, sometimes a long process, to permit and build a mine.
mhm.
And so it's worth owning some of them, especially when they're so cheap right now. But yeah, most of my portfolio, I don't know, 80%, something like that, is probably in juniors of the equities, not my total portfolio.
Right.
So I do own a lot of those because that's kind of what my dad's tradition was. That was our tradition working with Doug Casey. So I really enjoy it. And of course, you're taking more risk, but you have more potential upside as well.
Hmm. And so, in some of your recent talks, you've kind of discussed, and as well as a lot of the industry has spoken about how we're sort of in the early innings of a gold run here, and you've really honed in on the I guess aware making people aware that there's going to be multiple pullbacks throughout each of these cycles and each of these
Yeah.
runs. I guess what would be some advice to people to, I guess, be prepared for those pullbacks and not get shaken out too early, and be able to, but then at the same time not be a holding forever. I know it's timing is something that if you had a magic wand, you'd never be wrong,
Yeah.
but there is a kind of a line we're trying to find there.
So, this is an important point in my opinion because you can get shaken out. It's why some people lose money in a bull market, which sounds crazy, but it happens every bull market, and not just gold. It's every asset class, right?
Hmm.
Um, for a variety of reasons. But from 2001 to 2011, that bull market in gold, there were 20 corrections in gold of 6% or more.
Right.
20. I mean, that's like two a year, basically. Um, the average was something like 10%. If you keep the 2008 crash in there, the average was something like 12%. So there are some big and frequent corrections in a normal bull market. And so
Hmm.
you have to expect that. If you know that psychologically going in, okay, there's going to be, if this bull market were to last like the last one, there's going to be 20 corrections or whatever. Uh, Knowing that gives you a little bit of power, right? Because you know it's going to happen. When something gets frothy, maybe you take a little profit. When something sells off, including gold itself or a stock with that hasn't had bad news. Maybe that's an invitation to add a few more shares if you want. But just knowing that, even if you do nothing, just knowing that gives you power over the cycle. And that's
Right.
what you're really looking for in order to maximize your profit.
Hmm.
Even
So,
in, Jeremy, even in 1979, gold was in a mania, right?
mhm.
It was in a mania. Believe it or not, in that 13-month period, including January, when gold peaked, there were six corrections, major corrections in gold of over 5%. I, in a mania. So even in a runaway stock or I mean price movement, there's still going to be corrections.
Yeah.
So you have to get used to that fact. You have to accept it and get used to it, but that'll give you power on how to handle the situation.
Hmm. Hmm. And so with the way the market is currently, gold has had some of a run. A lot of people talk about it's due to central bank buying in China. China is gold crazy, which hasn't quite translated to the juniors yet, which people are saying makes the juniors the timing for them right now incredibly attractive. Are there any stocks out there that you're following, watching, you like?
Well, I have a couple picks for you, Jeremy, but first I wanted to point something out real quick, and that is I think the clock has started to when the funds will begin to flow down into the juniors and we'll see them move. And
Mhm.
that's this. I'm not guaranteeing I'll be right, but I think this is a very good way to look at it and see if it actually transpires. And that is this. The producers are going to start reporting Q2 profits, obviously in Q3, so probably around in August. And Q2, the entire quarter was with gold at an elevated price, up around the $2,300 level, probably on average, which was several $100s higher than the prior quarter average price, which means these producers are going to be reporting record profits.
Mhm.
And once a lot of investors, including the mainstream, Wall Street, see the green on the screen, if you will, about the big profits that they're reporting, I think that's going to draw some outside funds into our tiny little sector.
Right.
Once that starts, you can start the clock to when the money trickles down to the juniors because that's the historical pattern. It starts with the producers, then it'll trickle down to developers, then it'll trickle down to the juniors. So you can look at anywhere from 6 to 12 months once these producers report record profits as to when that might actually start. Obviously, it can be quicker. Maybe it doesn't happen at all. But I think that's a reasonable way to look at this because we will have a sort of shifting point in the sector, right? With um, when new funds might want to come into the sector because we haven't had gold average a price this high ever, right? So margins will be, $1,000 an ounce or something like that. So we should see good profits. But
Right.
there's a couple stocks I do like right now. One is Emperor Metals.
Hmm.
This is one I actually just put an alert out in our Paid Prospector newsletter last week because for no reason the stock sold off. There was basically one or two sellers from a fund that we believe sold. And of course, funds don't own, 100 shares, they own a million shares. So that put a lot of selling pressure on this tiny little junior stock. And the stock dropped all the way back down to our entry point when
Right.
we first recommended it. So this was a second chance to pick up this stock at a very cheap price. There's a lot going on with this company. They're drilling this year. They have unsampled drill core that they inherited that they're assaying. They also use AI. The CEO has used AI before successfully with a previous company. They're in a pro mining jurisdiction. There's a lot of potential catalysts coming from now through the fall for this stock. And this is one I'm very long. I like it so much. I actually bought it in the open market, and then I also participated in the private placement earlier this year. So I own a
Yeah.
lot of shares. I'm overweight this stock. So that's one I like. And then,
It
in keeping with the idea, you must own a basket.
it's one
The
we have.
second one I would probably mention is
Oh, I was going to say, yeah,
what?
we've I've actually I've interviewed John Florek and the CEO of Emperor, and it is a tremendous story. Like you said, there's a lot going on there,
Yes,
from the team, the jurisdiction, the asset, and then recently bringing on some pretty serious investors like Rob McEwen and others. So,
that's exactly
uh,
right. Yeah, there's a lot we could say about that, but I sure like John a lot too. He's great. So I
yeah,
think, they'll be okay. Small resource now. The question is how big does it get?
hmm
They're not even going to need to build a mill. That's another advantage. They're just going to sell to the underutilized mills locally that need feed.
yeah,
So that's a definite buy for me. And then the other one is, I like mentioned earlier, I just got back from Colombia, South America, and I went down to visit Outcrop Silver. And
okay,
I've been invited to visit them for, a couple years. And I kept kind of putting it off, putting it off. I just didn't feel the timing was right. Well, now I did. They have a resource, 35 million ounces silver equivalent. Um, the the thesis there is that they believe they ounces. That would be a very significant deposit. So I wanted to
hmm
see that for myself. And then, of course, the second thing I wanted to see was the question everybody asks is Colombia safe? So I wanted to
hmm
see that for myself. And I will tell you that it is not Tony Montana's world down there anymore. That a lot of that stuff's been cleaned out. The
yeah,
coffee business has replaced the cocaine business,
yeah,
and there's still drugs there in the southern part of the country, but a lot of that's been cleaned up. What I saw was a beautiful country of very friendly people with a project and a management team that is just dialed in and really ready to make this work. They
hmm
just reported yesterday, as you and I talk, that they did this huge step out hole, 3.1 miles, 5 kilometers away from where the resource is, and they hit. The grade was actually higher than what the resource grade is. So it looks like this trend continues. They're drilling
hmm
even further south of that now. So the path to 100 million ounces, you can actually see it now. So this is one I really like. It did run up on our recommendations. So, watch for a pullback. I actually don't own it yet because I didn't own it because I knew I was going to be recommending it. So our ethical guidelines are such that I can't buy it, but now I can. And so I'll be looking for a
an entry
pullback
point.
to buy my first tranche of that. But that's one you might want to take a look at.
That's actually a story that I know a little bit about. And speaking about safety, I know the CEO, Ian Harris, actually lives in Colombia and he's been down there for
Yep.
the last 3 years. We
Yep.
were, because I've lived in Latin America as well. And I think, and then as well, that district, it's sort of an undercover district because it's got a long history of silver production. And yeah, some of the grades they're hitting are very high. So that's a good one as
Very
well.
high. Yeah. Ian is the best CEO to take the company forward at this point. So I think he'll be great. I spent a lot of time with him. Uh, so I'm excited about that one. I think that one, has got a good shelf life to it. We're going to watch this thing grow over the next few years.
And the resource is advanced as well. It's indicated, they've got indicated ounces in that resource estimate. So they're quite well
Yeah,
along.
they are. And like you said, it's very high grade. It's mostly silver. They can
hmm
produce dory bars and get a higher payable on that as well. Metallurgy is extremely high. It was in the 92% range, I believe, for silver.
Yeah,
There
for
are mines in
recovery.
operation today that have 60%,
Yeah.
recovery ranges for silver. So very high. This could be, I called it a potential future silver powerhouse. So I think that is definitely possible. For what it's worth, it's one I'm definitely going to own.
Mhm. Well, thanks for both of those, and thank you for everything. You've left the listeners and the watchers a lot to take away. There's a book with a lot of good information to digest. Two good picks, stock picks there to go investigate yourself. So, Jeff, thank you for joining me. I'm looking forward to doing it again. And yeah, thanks for everything.
Yeah, thanks for having me, Jeremy. And this was fun. Yes, let's do it again.